In any case, Devin, the other big story that we're tracking this morning is the LIC IPO. It's India's largest ever IPO that opens for subscription today. The anchor book has mopped up more than 5,600 crore rupees, led by domestic mutual funds, which account for 71% of the book. Retail investors can participate in the issue till the 9th of May, while the price band for the 21,000 crore rupee issue is set between 902 to 949 rupees a share. Naveen Kulkarni, the CIO at Axis Securities, and Sanjeev Pujari, the Consulting Actuary, joins us now to talk about that. Gentlemen, morning to both of you. This is going to be the big story for the next couple of days. So Naveen, let me start with you. How would you value LIC now, and after the revision in valuations that we've seen, does it become an attractive buy?
Yeah, so I think if you look at the way we are looking at Indian insurance companies, clearly embedded value is a good metric to look at. The current embedded value for LIC is in the range of around 5,40,000 crores, and the IPO will be in the range of around 6 lakh crores, right? Once it gets listed. So from that perspective, it's trading at around 1.1 times the embedded value. Industry average for private companies is in the range of around 3 times. Clearly, that means that LIC is quite attractively priced compared to the industry peers. Of course, industry peers are growing and at a much faster pace. Nonetheless, whatever the embedded value indicates is that the current policies which are in operation, that will create that much value. So the current IPO price is not pricing in much of growth, which the industry will, right? So I think it's quite attractively priced at current levels.
You know, gentlemen, good morning. Mr. Pujari, to come to you and just focus on that embedded value for a bit. To your mind, what do you believe is behind the sharp jump in the embedded value as of the 30th of September? Is it just the non-par book moving to 100% surplus allocation to stakeholders, shareholders?
Yeah, good morning. Yeah, I think that is a key question which practically everybody is asking, and more so the actuaries. You know, what is behind the numbers and what is behind the movement in the numbers. If you look at LIC's EV process, the last 1.5 years, it has been extraordinary. Because it also accompanied a change in structure of LIC, which has been in place, the old structure for the last 50, 60 odd years. And what has happened, to just give you a brief idea, is that it used to be a par book entirely, where the shareholders would get a 5%, and eventually after the restructuring, so starting from 30th March, you move on 1.5 years to September 30th March 2020 to September 2021. What we saw as the structure of LIC is a 10% of the par book to the shareholders, 90% to the policyholders, and a carving out of a non-par book out of an earlier notional non-par book. There was a non-par book, but it was a notional one, to a book which was 100% available to the shareholders in terms of profit. So that was a structural change. If you try to put the change in terms of pure number of, in terms of EV numbers, then if you look at March 20, at a 5% earlier structural setup, the EV of LIC would be somewhere around 23,000 crores, and then you come to September 2021 with the change structure, it moved on to 5,40,000 crores. So that is the kind of change in EV that we saw, and then we're trying to digest that.
Okay. Naveen, you said the valuations are quite attractive compared to the industry peers. In terms of the VNB margins, if you look at it in the first half of FY22 at least, the margins came in at about 9.3%, much lower than the private sector peers. Do you believe that the VNB could improve because of a change in the surplus distribution policy and perhaps stepping up of the non-par business? What are we looking at over the next couple of quarters?
Yeah, so at this juncture, it's slightly difficult to project how the value of new business will move for LIC, right? Over the next 2 to 3 quarters will be slightly difficult to gauge. But having said that, the broad way that we are looking at it is that if you see the overall size of the book and the scale of operations, right? I think there is good amount of scope for the company to grow. Industry as such still will continue to grow in double digits over the next 3 to 4 year kind of a time frame. So how much improvement in the value of new business is something which is difficult to project at this point in time. But more likely, if I were to look at the industry structure and the scope for growth, I think even LIC will manage to grow its value of new business.
Right, Mr. Pujari, just kind of, you said that EV thing, and we are still trying to digest it. So, what implications does that have, as you explained it, going forward? Also, if you can tell us, I mean, one argument goes that value of new business will improve with change in surplus distribution policy and stepping up of the non-par business. Will you buy this argument?
Yes, I mean, going to the first question, I think the implication would be that non-par book is kind of heavily loaded with equity investments, and there is a sizable unrealized gain in the non-par book, which could be vulnerable to market movement. So that is point number one. So if you look at the DRHP, you would find the sensitivity of LIC's EV pretty much high with regard to the market movement, that is equity movement. So that is implication number one. As far as the non-par book is concerned, LIC had a significant non-par book, maybe not of the right kind, but again, if you look at the 2021-22 new business, almost 70% of that is coming from the retirer fund business, which is non-par. But again, there is a danger there in the sense that it's too heavily dependent on that kind of business. And then in terms of market risk, it does pose a major risk to the company. So I think the key issue is that of diversification. And when we talk of non-par growing the non-par book, it has to grow in a manner which would land LIC in a very diversified new business mix. That is number one. And secondly, the distribution channel also is pretty much dependent on the agency, retail agency. So that given LIC's financial strength and its tie-up with so many banks, particularly the PSB banks, it could try to scale up the bancassurance channel as well, and that would bring in the diversified business that it's looking for, and then the growth also at a pretty low acquisition cost, because we know that the acquisition cost in the bancassurance channel is pretty much lower than what it is in the agency channel.
All right, and with the way India's life insurance penetration is at such a low level, right? I mean, what 3.5%? Perhaps there's huge scope for this entire industry to grow, LIC included. It's the largest ever IPO to open today, so it's a momentous day for the secondary markets. So thanks a lot for joining us, Naveen and Sanjeev. We'll keep coming back to you for more, I'm sure, through the course of the next few days. Let's slip into a quick break.